And since it was long, it didn't cost me that much in margins.
Good afternoon. Welcome to another podcast from Traders Community. Welcome, traders, investors, punters, and dribblers. Well, if you're an energy trader, oil and gas, it's been a big week and a big day. Lots of nice rewards for all of us in that little world. Massive moves. WTI over $112. Brent over $115. Natural gas got up towards $5. Lots of news, obviously related to the way of handling oil when it's all been shut down effectively through policies and all that, we've talked about ad nauseum. So we'll talk about that. We had lots of earnings plays today. We'll talk about those. Huge moves in the bond market. We had Chairman Powell out today. What else do we have? So I think that's the main thing. We'll talk about the S&P and Nasdaq moves. We got the glorious Madavi, who is going to talk about snow ad nauseum, no doubt. Today, we got Meta Johnny hiding over there somewhere. And we got Volatility Radar here again with us today. So let's get into it without further ado. Welcome, everyone, and thanks for spending time with us today. So there we have it, the Longhorn on the front. That's not for your UT fans, given that I do have one of my boys going to A&M, so don't get confused. That's Texas. Anyway, here we go. If you're not from Texas, that probably has no meaning to what I just said. But anyway, so we're going to talk about oil off the bat today because that's the main deal. We all know the background there. We've been talking about a long time. You know our structure. We've been long oil stocks, long natural gas stocks. So it's been very good for particularly for Houston but also other sectors that rely on that, have invested in it, worked in it. So very good. So lots of smiling faces, no doubt. So let's go through what happened. We're trading at 111.39 right now in WTI. We're trading at 4376 on the SPX right now. The Russell trading at 2052. That has been the stronger out of the indexes relatively last couple of sessions. Well, actually probably a week now, right? Natural gas trading at 479 Henry Hub, and the Nasdaq cash around 14,200. It's been a volatile day, still very much so, but vol did come off from very high levels. So let's look at energy first, shall we? So if we look at, I guess look at Natgas first. So we're going to spend more time on oil. So on daily, we talked about yesterday, it needed to get back over that tankin, which it did, and it broke up over the Cajun technically. Two factors running it are weather and the perception or otherwise of speculators with European shortages, which I know US politics wants you to believe this is all because of Russia, Ukraine. We talked about that WAG a long time ago. We were at these levels. You can see where we've been. So the Ukraine stuff is pretty recent. This is all to do with the policies that enabled this through Europe, etc., and the US. So just keep that in mind. And that's important to understand when you're actually trading this stuff. So we're above that. We do have the EIA storage report out for natural gas tomorrow. And Lord knows what happens overnight as far as geopolitics go. And also you got your weather models. If we look at weekly, you can see these big long bars which are keeping volatility broadened. As far as resistance goes, this weekly Cajun just under $5, around $4.96, $4.95, is your big resistance. Very clear, this is either a 3 or 5, right? So what's your ABCs? Keep it simple. As far as what we did today, as we were saying yesterday, you trade it. Just a 5-minute chart. It went up with oil, pretty clear, nice break here, and hit plus 1/8. All the way got to 491. We took profit on this here. We just did this little trade, which we talked about. And when we got out of, and so this went up as we get to oil when that second run after settle. So we took profit at settle on oil and gas. WTI settled at 1:30 Central Time. And then after that, news came out about more moves with Russia as far as their oil and all their products being banned. So that got a nice $2 pop on oil, and it pushed this up. Looks about 25 cents. So basically, when this happens, you're looking for confluence, and you're looking for, I mean, you can sell here, I guess, if you're Johnny Hindsight. But basically, you look for cohesion with other markets, in this case oil, and you saw the offers starting to come down. Okay, so let's get on to oil. So let's start with daily. So today, so remember all our work was done at 8/8. We hit 8/8, we come down, we hit K. This has been technically beautiful, and you need to have good technical understanding in markets like this because these are emotion, high risk. I mean, we have moved $20, more than $20 in a handful of sessions. I haven't seen this really since back in the 150 days. That's how fast we're moving. And fairly orderly, I might add, right? So we're now up here. We're going to move this up here because we're still, so they're your alternative. This is 5 over 5 to complete, or we're still in a third wave because this is so powerful, right? So we're at plus 2/8, hence why we took profit at the settle. It came down and we redid it in that news play, just a scalp. Okay, let's look at weekly. So you look at weekly, even more standing. Look what it's hitting. That plus. So these, remember, all these levels are worked out beforehand. We're not working it out after. We talk about them. It goes in your weekly report. All that stuff. So you have a plan. So that's why I always try to caution people about dribblers. All over, particularly on Twitter, that they don't even trade this stuff but got opinions. And that can be very, very deadly. So look how extended this is. Right? This is a 3 or a 5. Pretty simple in a weekly basis. It's hitting plus 1/8. Let's look where plus 2/8 and all that is. If we want total blowouts. So 125, 138, and 150 are all mathematical possible. Where's our support? 08, obviously we know 100 was a lot of work, and you want to look at, and 98.57, you want to look at your open interest to see where the option levels are. And right here you got your Tankin is catching up. This is a weekly one, is 92.50. See, it's all black and white if you want it to be, right? It's all math. Let's look at Brent. So Brent is right in the fire as well, as you know, and that spread widened out. Remember, it got real. So that's another thing to look at. You saw that spread come in almost even, right? As far as a high, and then we saw it widen again. That got over 115, or barely, but it did get at 115. See that? But look what it's trading off. This is a 240, breaks the pennant. This stuff, understanding news on any liquid market if you understand it. So, bang, nice there. We flew. So you have a bias long on news risk. But see, how do I say it? So basically, if it's meant to go that way, it's going to go that way. If it's overbought or oversold, it'll be limited or extended depending on the nature of those two factors. And that's why we use the Murray math. Let's have a look at this on a longer time frame. It should look very similar, if not the same, as the Texas instrument. And there you can see, so here's the difference. So Brent actually has already corrected up because remember it was ahead for a long time. So 8.8 on that is way up here. Look where plus 4.8 is. Almost the same amount though, right? See? 150. And if we go to weekly, let's see what weekly tells us. So on weekly, 8.8 is 150. So that just means it hasn't recalculated yet, which shows you where. So this plus 2.8 right here is the old, because this is daily versus weekly. Okay, any questions on oil, or are we all good? Okay, good job. Let's move on to the SPOOs. So SPOOs today was a pretty steady climb. Watching vol, it pretty well gave you a nice catalyst to buy today. So if we look at this, a 60-minute chart, we opened up in here. We failed to break this level. This is cash, 42.80, and we just dribbled up all day. See that? One, but look at the count. 1, 2, remember to learn your ABCs. I guess they're different ABCs to what your kids are meant to learn. But when it doesn't go lower, you also know where you're wrong, right? So it's easy for a stop. You got that 1, 2. But I got to tell you, this looks easier than it was. We had futures we were able to hold for most of it. But the calls actually got out fairly early. It turned out all right in the end, but you could have made more money. Because vol started falling as well, I want to say we had 4,500 or 4,450 calls. So, but they were short dated, i.e. expiring Friday in 2 days. So they're very sensitive. So you've got to work out the capital. The longer you go, more capital. But the theta is going to be more advantageous to longer positions, right? So let's look at that on a daily level. So daily, we traded and closed right here at 6.8, but we got back inside this channel that we've been playing with. Remember, this was the other reason we bought. We talked about this yesterday, I believe. We were very quick yesterday, so we had to get out of here. But you can see it didn't quite get the tanker, but you can see the standard pattern of 1, 2. This will become more obvious why we actually shorted this at the close. Hang on. Yeah. So on the close, it got right to our 50 just before the close. And it was 4,400, which was also a big optionality level, big OI, 4,400 on cash. So that was a deal he didn't give too much, but it gave you an exit, and it fell 20-odd handles on that. I think about 25 handles. So again, you go in with a plan and a structure, and then you trade through the day, and like I said, on those options. But it's always better to get out early than late. Just always remember that. As far as the Dow goes, remember we got back inside that. We couldn't get under it. So really nothing much there. But you can see it's back. It's got to get under that to be bearish again. Or off here, you short it, right? Okay, let's get on to the Nasdaq. We'll bring Madavi in. He's like the Nasdaq, the NQ man. So, which...
Oh, yeah. Another disaster in the morning, man. I got to quit trading those mornings. Man, first time in a while first time ever, I lost 100 points short and I lost 100 points long.
That takes a bit of skill. Just saying. Just saying.
Skillful, man. If you want to do that, I mean.
So where was that? That was this. So you went long here and short there.
It just went in here. I got.
Let's look at a 5-minute chat.
I shorted the bottom.
Yeah, that can be frustrating. So.
Yeah. You think it's going to break out of there, but just right there, I guess you missed it by an inch of a chart.
So what's works for me, and you probably notice, punters, is that when it becomes difficult or blurry, the fog of the markets, I try to wait for something. So I haven't been super active. Like when it gets like that, and then I tend to really go when it all sets up. So for me today, and I didn't expect it, well, the first trade I did was I bought Apple stock and bought Apple calls, and we bought them a fair way away. We barely got up, and I think at the end of the day, probably lost on those calls, right? I was short dated, but the stock went up. So that's a good indication what's going on there. The vol is coming off fast. One thing, and it shows you that the commercials or the hedges, whoever you want to reel at it, are actually trying to sell that vol. And you're seeing it individually on stocks. I mean, we did that ourselves last week. Remember Madavi on Etsy and stuff like that. So it's hard to believe, right? So $4 or something I made on the stock and lost on the bloody call. So, but that's why you do them sometimes. Remember, I'm not buying out the money. We're buying out of the money, and sometimes I do that to get a read of it. You're not really putting much at exposure. As far as SPOOs go, I waited for that move and just stayed steady for most of the day per that chart. Now on Nasdaq, this is what look at see how volatile that one got? This is what you're talking about, right, mate? This.
Yeah, it's real crazy.
And then finally it broke up as with SPOOs, and then from memory, we'll look at Russell, but that's what you really did really well on today.
Yeah, I did well on Russell and I did well on the SPOOs. I've been doing, it just so, man, when you start, when you got a stock that can range on you 100 points and you carry even a couple of contracts, I mean, it can get expensive.
So what did Uncle Andrew say about that about 2 months ago?
I don't know. Uncle Andrew says a lot.
The SPOOs.
They just get, and when it's got no direction, got no rhyme and reason, and you're just playing.
Right.
You won the trading, So so sometimes you gotta.
Well, I'm just noticing on this. It's a 5-minute chart, but this is a reverse head and shoulders here. So, in hindsight, that was probably a good buy there, but we were actually buying there anyway. But if you're watching order flow, you'll see this pattern, right? That's a real dishwasher kind of moves or a popcorn machine. So let's look at NAS on a weekly. So weekly, it's very remember we got that double bottom. So we're kind of trying to, that's why we don't stay short too long, because that's powerful. Look, there's some blokes out there that are very good. Remember, this can be an ABC, right? So we know it's bad out there. We know that there's inflation. We know there's wars and all this. We also know until it all busts down, the dribblers that have made money or just punters or whoever, even these hedge funds that are backed by the Fed and stuff like that. I don't mean literally backed, but backed by cheap money. They, as Madavis and myself have pointed out a lot of time, they do not understand the risk of a bear market. They've never lived through it, right? So it's almost like they got to be wrecked, I guess, for to break that. So obviously it breaks that. That's the bottom of the cloud. That's that line. That's a fair way away from here, but otherwise, this can be at 1, 2, 3, right? And this is our big level, this 50 WM. It's a long way away. That's your bigger picture. Just you always want to know where you're wrong, basically, right?
Look at the reason it ran up today.
Was there a reason? The interest rates. Yeah. Sorry.
Yeah, that's basically all I got out of it.
But
I didn't know it was so great.
Well, what I thought was interesting, the Fed funds have been saying for a while it's only going to be 0.25%. And that's all that Jerome Powell confirmed. But what's clearer and clearer is the majority, well, machines don't care, right? So algorithms have no emotions. But the majority don't get the pieces. That's why I say always beware at dribblers. I don't even look at them. There was a period where I'd look at them to see what they were thinking. But it's kind of like if you're driving in the car back in the day, you put in the radio and you just couldn't pick a station up, all that static. That's the worthless stuff that is. But it's more than that. It damages the way you think, right? And it's just constant negativity. So you want to be positive and run with it, so you can take advantage of this sort of stuff. So we know that's very clear where that is, right? Daily. So we traded above the Cajun. Normally, if in a rational market, that would be bouncing off the top. But because it's in the middle, it's basically worthless, right? If you're going to base it. So you got to go short term to read that. I mean, you can be lucky, but... so on what's this, hourly? This is the one we just looked at broken up, but you can see how choppy that is, right? And these, as Madavi just said, these are big moves. This is 100 bloody handles right here. I mean, these are 100 handles.
The market hasn't even opened yet.
No. So where I'm kind of lucky in this, when it's because my primary is energy, is I'm not looking at this really, am I? Until that slows down. So let's look at Rusty, because you really have. I haven't, as I said yesterday, I haven't done a trade for this for a while.
Rusty's been pretty strong,
Yeah. Whenever I think it's strong, I usually get whacked.
It's like a girlfriend that you have the beginning romance with. Then it gets to you as soon as you feel comfortable, stabs you in the back.
Mate, why do you got to keep bringing my girlfriends up?
No.
We could go on all day about that one. Anyway, so on the daily, well, let's look 5 minutes, because you really read this well. And you said, mate, I'm buying the Russell, whatever.
I mean, look at it. For last week, we've been watching. The only thing that's been solid, that's gone really...
It's been the little guys, right?
And actually... It's the Russell. As the Russell became the steady compared to Nasdaq.
Well, Nasdaq's been like that drunk uncle at Christmas, that falls all over. Yeah. And then the S&P's been fairly steady and predictable, really nice, actually. But this Russell, and Dean also has been like you, been pointing out that this is, really well. He's been selling puts on stuff and doing really well on it. And I think this is where you got bullish. You couldn't have got it much better. You can see it broke out of it, touched Cajun, and then you run it. And I remember you showed me your high. You sold at 65. That's pretty nice.
Yeah.
So, I didn't partake in that. I just had S&P, Apple, as far as stocks. We did a lot of stocks, actually, today, which we'll go through.
It can be a heartbreak after a while.
This thing's constant heartbreak to me. I make money, lose money, mate. It's kind of like you said, that girl. Yeah.
I make money. It takes it all back plus interest.
Yeah, 100%. I get sanctioned. I've sanctioned myself on Russell, I think, for a while. It seems it's a safer way to be. Okay, so and Vol Radar pointed this out to me today. Just how much, because I wasn't really paying. Look, normally Powell's talking, ex-bond trader, I'm going to be looking at bonds, right? But when oil's jumping around 110, that's pretty well all the focus. Myself and other blokes that you all know. Anyway, looking back at it today, and look at this on the 10-year. This is the 10-year note, which is really the benchmark for debt, each country's 10-year. Look at this movement, Madavi. So remember, this is the bond, not the yield. So look at this move up here. So up, that means bond strength. And this is a daily chart. But look at it sell off. This is a massive move. Just look at what it did in Murray terms. Plus what? This is a daily chart. 1/8 all the way down to minus 2/8. So a full 2/8 move right to that breakup channel and right to the Cajun. There. Killing me, mate. I got to work on my Japanese, don't I? So think what that means. This is fast. This is in one day. Saws yesterday. Now, you can take whatever argument you want on this. This could have been safe haven buying yesterday, or it could have been the Fed's not going to raise. They were never going to change what they were going to do. right? They've been very steadfast on this 0.25%. Other than Bullard went to 0.5%. But it was never going to be not going to raise, right? So all of a sudden, it dropped. So just think of all this money. This is kind of like what you're talking about the Nasdaq, except this is a 10-year bond. So this is massive. And the 30-year bond did the same. Actually, right across the curve, the front end or the short tenors, meaning the short, 2, 5, were actually the hardest hit today. They lost a lot more money. And it was right out the curve. So remember what that means. The 2 is the Fed funds rate. So big move there. Let me see what they were. So to put it in points, what you're looking at there is 16 basis points, right? So remember, it's 32 points per each level. So 16 basis points on the 10. The 2-year moved 22 basis points. And the 30-year, even out that length, moves 13 basis points. So that was a massive move in bond markets today. I'm interested to look at commodities before we do stock, because gold was your other safe haven, right? What did gold do today? So gold hung in there. Look at that. Oh, this is weekly. Let's make this daily, eh? I say on the daily chart here, so gold had a wild day, but look what it did. It went under the Tenkan, the orange line, but closed above it. So it looks to me like it's still building this big pennant. Obviously, this is what we talk about, the dribbler moves. They get in stuff. They all get stopped out, and then reality happened, or the true direction returns. We saw that in oil more than anything. 100 down to 90 in lower, then back to 112 and change in a matter of days, right? So what did silver do? Well, about it. Silver got back to that. Interesting. Silver's stronger than gold today, so that means that probably more than, I don't trade these a lot. Actually, silver I don't trade. But we're looking at it, but I do watch the silver and gold spread. So obviously today they sold gold, bought silver. Copper, we have that FCX position. We've been calling this for a long time. Not calling it, waiting for it. Copper actually traded right at that channel, that triangle. And FCX is all right with it. I just want to look at AA. So, almost if you trade AA, which is Alcoa, you're pretty well going to end up in AA. We should patent that. Anyway, I didn't trade this today, but yesterday, the last couple of days, was very violent. You've got to kind of have all eyes on deck. When something like oil's going around, I'm not going to go near this. What else happened? Commodities. Corn back up. Beans steady. But you can see these big, they're not islands because there's no gaps, but look at these. Okay, let's look at the charts. Ready to look at some stocks, guys? I think that covers everything, doesn't it? Oil, commodity, stocks. So let's look at what we traded. So I know Madavi wants to talk about snow, so let's let him talk about snow. Here you go. Here's snow. They had earnings today. Huh?
No.
Yep, I got it up for you. What do you want to tell us about it?
Well,
I didn't go near there. I don't have. I'm shaking knees.
First of all, if you know about snow, when this IPO came out, they were saying this is like the greatest thing since sliced pie.
Sliced pie or sliced bread?
The IPO was, I don't know, some ridiculous thing, $300-400 when it came out. This was going to change the world. Well, fast forward, I guess last year forward, you got snow today. Came with its earnings lower than expected, so the growth rate is slowed. And I figured, hey man, when the stock's down almost 100 points, since it's the greatest thing in the world, why didn't I try my hand?
Yeah, I might have to. Let me bring up a 30-second chart because that was some pretty. There you go.
Yeah, so it just felt like it's like, when you go off the river into the fall, that's what it looked like.
Yeah, it's just a
Just
straight waterfall.
so I tried to buy some. My first buy, I got in at 207, thinking that, I could beat the 200. Maybe it's going to stop there. People are going to buy it. Man, that thing just hit me. Then I seen this thing's going. The next thing I knew, I got out at 202, took a 5 point loser, and I was like, man. And I told everybody, hey, let's get on snow. Nobody liked the idea because it looked terrible at that moment, and it really did. I thought maybe I'm crazy, but it went down to, I think, 190. So that's another 12 points from where I got out. So I hit 190. I picked up some. Then it went to 187. I got more. Then it went to 182. At 184, I picked up more. And I think I picked up another one in
Yeah, it's not a bad way to play. I mean, I didn't do it. I've had enough with oil and all that today, but
I had to sit with it for
spread it.
babysitting and like pet it a little bit and talk nice to it, tell them how great it was. And finally it popped. So I got out of some of my shares at 207. I'm holding some back over here. I got out
Yeah,
some
it's
at
not a bad
204.
way to play.
I'm holding
I mean,
a little
I
bit back,
didn't
see if
do
this
it.
thing pops to 220. That's it's a high risk trade, but
Well, what I like the way you did was when you knew you were wrong, you took your loss. You didn't, and then you waited and then changed the size a little bit and accumulated. And knowing where you're wrong, once you see this price action, you can see someone buy. I mean, to be clear, I didn't trade this, right? I trade some other stuff, but
And this is Snow, by the way. This is, if you go read about Snow before it came out, I mean, they talked about this thing. Oh, like these guys who run the company are legends, and I mean, they really put the really spin on this thing.
yeah. It's a combination of dribbler and puncher. This one.
Imagine the crappy stocks, So just a warning out there for everybody.
Yeah, so that's Snow. So I didn't do that one. So as you know, if you probably noticed, we pretty well just trade the earnings, and then we have some more nice swing stuff that we're familiar with, like oil and gas,
I got
commodities.
IQ. Great idea.
Oh yeah, it did well on that. That was a nice one. Yeah. It kind of helps to get in. Well, let's look at that in a sec. Let's look at what we traded. So here's IQ. So this had earnings this morning. Then we go a bit longer term. You see what we did.
Example of timing.
Yeah,
one doesn't. Or it's holding on for a better day.
So this one I kind of watch. I try to familiarize. That's what I'm looking for. I've been practicing my Estonian and stuffing up my English. Anyway, so they had earnings. So to familiar with this stock, a lot of you probably know it. It's known as the Chinese Netflix, and they really haven't made money for a long time. It was a hot IPO probably a couple of years ago now. It was way up there. They announced earnings. They popped up, and I shorted it. Where did I short that? About 550 or 60, right? Pretty good level. Anyway, I held it. Covered half. I tend to cover half on these things. Sometimes, yes, you could have held it for a lot longer, but you always got to remember that you're protecting when it goes against you, not when it goes for you. So you want to lock in your profit. I traded all the way down here to, what is that? 466. And now we're just doing a wedge, and I expect this to continue down. They don't make money. They're from China. It's a dribbler stock, etc. Anything else? So the difference is, I think, on yours, you came later to the party. You covered some of it, and then that's what you're talking about, right? But you're not too far out. So that's IQ. Any comment on that, mate? You good? Okay. So the other one, after hours.
Mate, what did you say?
Oh, I was going through IQ.
Yeah. So I got IQ, and I'm just basically, this stock, the only thing I don't like about it is this thing feels like it's getting up to that $5 area, and it could be one of these Chinese army running things. The Chinese.
Well, I think it's too big for that. Yeah, fill everyone in what you mean by that. So you're talking about the Chinese stocks that get ramped that have no value, right?
All these stocks get ran, right? And I personally think there's agents over there. A lot of them are traders. A lot of excellent traders over there. Believe it or not, there's these huge workshops out throughout Asia where these guys trade stocks, and they jump on these types of stocks and they run it. Even with size like this, they got a massive amount of buying power because they're
they're outside the U.S. jurisdiction, right?
Yeah, no, but they can be trading around the world, anywhere. But it doesn't have to be in China. It can be anywhere around the world where you can trade.
Right.
You know, so they give them their buying power, and they're basically prop traders, and they sometimes run these stocks, and we've seen it a lot of times. It does have a lot of shares. Mate is right about that, but this thing's also a real company.
Yeah, it is a real company. Yeah, Netflix. So
I'm worried about it running up to like $30, $40, but it can still because the way this thing moves, I have a couple of shares on it, and it doesn't need to get that much to beat me up.
Right. Yeah, I was explaining when you had to take that call. So I was explaining how I got in, took half of it, and then I've kept half for continuation down.
You remember when I started getting out of some, and I did get out of some, but then I put it all back on.
I didn't know that. That ain't good.
Yeah, so so I put it back on, and that's the only thing I like. It goes over that $5. I'm waiting for the Chinese army come through. They haven't shown up yet, thank goodness. Let's hope they don't come.
Well, let's look at it on a daily basis to put it in perspective. So I've shorted it here, right? Or this is daily. You can see what it filled. It filled that gap that was over here. So that's fulfilled. So that's that bar. Remember, this is on earnings. You can see the volume. So to me, it looks like a 1, 2, 3. We got the red spug. And so a reasonable target would be to fill in around 4. The low is 327. And really, there's not much of a reason why that won't get tested at some point. Because this has just been a disaster over time. Just so many stocks like this. And you've got all the geopolitical issues, of course, with China, etc. So that doesn't help the cause. But this is what Madab is talking about. You can see it dribbling down, then it has these spikes, right?
So this is the reason I shorted. Chinese stocks are out of favor. And once it went below $5, I was like, man, this thing's going to go lower. So even though the mate got a way better price than I did, and I should have had a better entry like him and been more patient, but those factors made me think this thing's got a little bit more leg down.
Right. Yeah, and so remember, you got to look at catalysts. So this was all because of earnings. So if you notice, we kind of pounce on these when it's earnings. Okay, did I just press the wrong thing? I think I did. Hang on. Oh, no, I didn't. So we're going to look at SOFI was another one. If you recall, we did that last night. It was just a little 20-cent trade because we saw the guy buying. And then we traded again today, right, from the short side. Yeah. So overnight, so this was earnings yesterday to fill you in the background. And then it got downgraded. We were done with it, right? Because it had that move, but we had it up. We were looking about it. We were analysing it together. And while we were doing that, we saw, I can't remember who it was, but someone downgraded it, right? And I think we got short. You got short earlier. I want to say you got short up here, and I got short here, right? Something like that. But anyway, you can see it just got pounded because if you recall, the reason we got out of the short after earnings yesterday, because they were ramming it up. Remember, fake size on the offer, they bought it, and blah, blah, blah. So we knew this is a dribbler special. In fact, Radar pointed out that this was the singularly most mentioned stock on social media today. So if you want an indication of a dribbler stock, that's pretty well it, right? So that helped too. So anyway, again, I get out a half on momentum and levels, and then but We got most of that. Look where it closed. It's still going lower after hours. You can see.
Yeah, that thing got pounded, and I should have stayed with that, but I wanted the other one. But
Well, it was hard when. So here's what makes some of these stocks hard. Yes, it's earnings. It's particular, but the Russell was running hard today, right? So that gives you a good indication. A lot of these trading rooms and Reddits and stuff like that, and the dribblers, all on Twitter and that's one of their big indicators. So this is that type of stock. So it wasn't that easy to stay short, really, was it? In fact, we probably wouldn't have done it if it didn't get downgraded, I don't think, right? Because that gave us a catalyst.
All over it.
And then there was another downgrade by B of A, one of these cells. I think it was probably this one. Look, I don't know. So that...
and then Nordstrom was good too.
Oh, yeah, so let's go through Nordstrom, the chart. Because if you recall, we were underwater this yesterday. But we're pretty, what's the word? When you're up, say what you're doing?
Up shit creek.
Oh, we were that, yeah. Transparent, that's the bloody word I was looking for. So if you recall yesterday, this thing had earnings. And it was like, I got to find it. Wow. So it had earnings. It went from $19. They beat earnings, and they said they're going to increase their dividend or something, right? Give cash back anyway in some shape or form. So we sold, both of us. I wasn't quite as big as Madavi. We started to sell here at 25, and then some more at 26.80 or something. Anyway, the average was 26.20 or so, 26.18. And so we went home down a bit, and I said what we're going to do with it. If it was steady, the plan was to sell puts against it because of the high vol. Look, we all know vol's through the roof. We come in, and it was down $2 pre-market. So we covered this. You did a little bit better than me, I think, but 20. It's not showing up here. Oh, here it is. So 24.20.
I got in at 1 o'clock in the morning. Around.
Yeah. So 24.40 odd. So it turned out to be almost a $2 trade. The important thing to note is here, we're not just punting, right? We're selling on resistance, up huge. We're aware, we know the stock fairly well. We just trade around earnings pretty much so. And then when it was down, I said, you know what? We just need to take profit on this rather than worry about selling puts. We did not go long. No, sir. We did not take advantage of this. But we weren't intending to, right? Obviously, we sold here. We're not going to spend time. So that's the other thing. Oil's up, Natgas, so we don't waste time.
We should have taken that.
Yeah. So we should have, but we didn't. So okay. The other one we're going to update was Oxy, which we've been running since Thursday and Friday. So what times? It's a 30-minute. Okay. Let's bring it down to 15 minutes. Okay. So on here, so this has been, I really like trading Occidental because it's cheap relatively. I know it's $40, but compared to other things, it gives me a good read on what the stock market is. We have a lot of energy stocks in our portfolio, as you know, for want of a better word. Is it really a portfolio, they say? But anyway, we got back into this at 38.50 on Thursday and Friday, and we've been running it since. And what I don't just trade these blind and buy and hold. We'll trade these spikes off Murray. So anyway, this one's been really spectacular. It's up $10 on a $38 investment. And there's reasons for this, right? It had earnings. They paid back debt. And obviously oil and gas, they're massive in the Permian, etc., etc. So this is, I could show you all the other ones we have, but they're going to be very similar. P10, Exxon, Chevron, and the other ones we played around a little bit today was Baker Hughes, Halliburton, Schlumberger. Really, when we're not in them, we tended to scalp them, right? 20, 30 cents. But you need to look at these patterns because what you can see here, see how it's running up with the Cajun and Tenkan. So as long as those are in control, they're fine. But you also got to remember the overnight risk on these things, right? Because of oil and gas. Yes, they're making beaucoup money. We know that. But the machines aren't going to trade it like that. Okay, what was the other? Okay. So Splunk was a nice one after hours. I managed to do. So here's the thing: you did one of these the other day. But
yeah, I got a Splunk, but you did better than I did.
Yeah, so I happen to have it up in my window. So what I tend to do, we go through the clouds, and if we got time, we tweet it out. We'll put in about 3 or 4 market maker boxes, the stocks we're going to watch. And then they pop up on the grid. This thing, you can see where I sold, 1 plus 2 8s, I had the order in. And look, you're not going to do massive size on this. You're not going to do 10,000. Of course, you're on Twitter, you probably did 20,000 there. But in reality, you're talking hundreds, maybe 1,000, right? Unless you're even a big hedge fund. Because even in these crazy times, one of these can do what Car or something like did, right? So remember, market makers ain't going to be in these. So anyway, it gaps up. We got fortunate enough to get short here, 128. 20, actually a bit of slippage, and then it kept going. Look at this, to 130, and then it fell like a rock. And I took probably a little bit early. You can see it went down to 113, mainly because we've been in this before where we've been short or long, and it's within seconds it's gone $10 the other way. So you got to bear that in mind. This is like punter stocks, really. It's not an investment. Yes, it's trading, but you're up against very fast money, punters. There could be orders probably stacked all the way up here from people short. And then that means someone's long up here, right? Does that make sense? Were you going to say something, mate?
No.
And so to get out of it, I would scale it out. Bid here, bid here. I was out by 116.5. You can see it went down to 112 and change. But if you miss that, it doesn't really matter. It's just a tremendous trade, right? And these don't happen very often. There's a handful of these dribbler stocks that give you this. Because what happens, all these dribblers are underwater, right? And they see this, instead of a pro, A isn't going to be underwater, but he's just looking to smack these because he knows what's going on, right?
And here's the deal. If you get stuck real easy on these things, you're probably going to be a loser.
Yeah. Well, so that was Nordstrom yesterday, though.
Where the prices are, it's hard to get stocks. There's not very many.
Yeah. And I got bugger all, right? I didn't get a big position. So on Nordstrom, see how easy we got filled and it just went through us. Now, don't think we're not massive. I'm not trying to say we are. But what we're saying is... I'll put it this way. If I was 20 seconds later on that short, I wouldn't have got it, right? And I wasn't the top. It went
20 seconds. You're probably about 2 seconds.
I mean, it went immediately $2 higher. Was it 2 or more? More than $2 higher. And then literally as I go, Madavi, Splunk's out. It was already under like 120 something, right? 121 or something like that.
Because I got it on 125. You got it on 127. So by the time you told me that, it was a 2-point difference.
Yeah, I got it 120.18. I had that order.
Oh yeah.
I mean, almost as long as that sentence was, and then we got out of it like on the bid. Now, yes, it could have gone. So as I've said before, and I'll show you this, I got out of this too early too. So I'm familiar with this one, Kupang. This is when you were trading snow. I traded this one.
Yeah.
So this is CPNG. For those not familiar, this was a new IPO probably a year ago that was South Korea's Amazon, they call it. Like it's a big social, whatever Amazon. What do you describe it? What do you call Amazon? You know what? Bloody. What? Sorry, was that, mate?
Online retail?
Yeah, that's the word. I'm trying to think. It's not social media. I'm like, so I shorted this, and again, I said to Madavi, I think I'm the only one in it. Remember that? So again, you can see there's basically no volume, right? So I've shorted it up here. You can see I didn't get a lot. And so that's another thing that actually Madavi had to lot me this. So we had someone saying they were in some front, and I'm thinking, no bloody way, right? Because we kind of know what we're doing. So watch your time and sales. And so you'll know where it's really traded because it's got to be in there. It's on an exchange, right? So you can see this spotty thing. And what I noticed, so I shorted in here 24 after this. It came out. I shorted on the high-low ticker and I shorted a little bit here. I didn't get too much. I mean, this was really hard to get. You would have, the bid was 50 cents and I wasn't going to sell 50 cents, right? So what I noticed, so it fell, the 60 cent spread, and whenever I put a bid in, the machine would get above me. So then I pulled my bid and managed to get out down here. So I made nearly a point on it. As soon as I was done, look what it did. It kept going again. I got out $1. That's $1 too early. But no one trades it, so I was happy to be out. And look what's happened. So this is during the day, right? Now we come on, and now look at this, after hours. So I'm trying to see, that's pre-market, no one's trading it. But it's a mirror image of here, except see these long waves? That's like 10 shares, 100 shares. You see that? So what I did, taking it off here, was, wow, did it really go all the way? Wow. So here's what's in it. I stopped watching it. But look at this, mate. I sold here, bought in here, I think. I went lower, but look what it did. This went all the way higher than when we shorted it. See that? So what I'm trying to show you here is this is an ADR. This is Korean. This is what you're going to compare it to, not to this. Because this market isn't going to trade it. Does that make sense? Anyway, so again, we just try to take the meat out of the market. And there's no volume here. There's no volume there. See? But on Twitter, Madavi, I guarantee you someone bought 10,000 shares here and sold them here, right? Any other stocks we traded, guys? Splunk, Nordstrom, Occidental. That's it, right? Okay, let's... We looked at Snow. Let's look at Apple. I mentioned that earlier, Apple. Oh, actually, here's Exxon. So Exxon, you can see this, right? Very similar to Occidental. The difference is these guys had earnings, and so did Chevron the week before Occidental, and they're $40 versus $80. So you got a different crowd buying it. So Exxon and Chevron did. Who did they bought someone anyway. They bought a takeover that gave them a few more legs. But you can see what's going on. Look at the gaps in all these stocks too. Okay, let's look at Apple should be on here somewhere. There it is. So here's Apple Weekly. I'm looking for a retest of this 167.47. Right, that's the Tankin. If it breaks here, it can get to 170, 175, which is plus 2/8, and there's a lot of optionality there. So that's your weekly. As I mentioned today, though, because there was so much vol in this, I actually lost on the calls. That's crazy, right? Because remember, look at the range, though, today. So this is 163.20 now. It traded up to 166 from 161 today. So it's closed mid-range. But again, if you're trading these stocks, and this is the reason we watch Apple, is it's such a big part of the S&P and the Nasdaq. So there you have it. So all pretty cool. So I think we covered everything, didn't we? Anything else, guys? Any thoughts? Madavi? Johnny?
No, let's go. Hit your like button. If you like
all right. Oh, hang on. Let's look at this real quick. Yeah, good point. So here's crypto. We noticed it had that massive move, right? And we're consolidating on that. There's a bunch of articles out there saying the whales accumulated it. Now, let me just say, unless the whales are telling you that to move it up, how would you know, right? So I tend to think more it's to do with all the stuff going on with currencies and sanctions and wars and all that sort of stuff. Where's Ethereum? There we go. Is this Ethereum? Yeah, so if you look at the weekly, the height of that was that tanking. So as I said, I don't trade these, but I watch them to see where the crazies are. I mean, did I say that? Sorry. I think that's it, guys. Any thoughts, Radar? Any thoughts there? Anything else? Oh,
pretty quiet day for me.
Well, you did go to the dentist, didn't you?
Yeah, mostly teeth work today.
I think I got everything.
I just saw Western Digital reported late. We don't really trade it. Let me see what they did. Looks like they lowered guidance. Surprise there. 4.2 to 4.4 down from 4.5, 4.65. Anyway, so that's it. I don't think there's much else. Tomorrow, let's see what they got out. We've got through Powell. We've got through EIA for oil. We got through OPEC. I didn't mention that because that was the shortest meeting, I believe, on record. Obviously, it's OPEC plus. Obviously, Russia wasn't part of it. They kept it at 400,000. The increase, they didn't change it. That's part of also why we're up. So tomorrow we have... Oh, then don't forget, we're all setting up for the jobs number on Friday. What do we have tomorrow? Let me look at it. Should be on this. It's not on this screen. Let me look at this screen. Okay. So tomorrow we have the jobless numbers. The jobless claims numbers. The ISM services or non-manufacturing. For February, productivity and unit labour costs from Q4. So they're old numbers. We're in March now. And factory orders for January. We should mention the ADP number came out today at 475,000 jobs. And they were looking for 350. And they also revised January up to 509 from 301. So that suggests, not that they're ever that close, that a decent jobs number on Friday. I'm not sure what they're expecting, actually. But that's what I'm imagining at 350 because that's usually the same as what they expect on ADP. So that's it. Like us. Smash that like key. Subscribe to us. Remember, follow us on Twitter. We're not real active on Twitter, as you know, when it gets crazy, but we do have our oil and gas number out, and thanks for all the people that take part on that. Remember, Volatility Radar. Follow Volatility Radar at Volatility Radar, and subscribe to his bulletin, which he's actually adding some pretty cool stuff there we're talking about today. So do yourself a favour, follow that. And that's about it. So we will see everyone tomorrow. Be careful. If you're dicking around in these commodity markets, be careful. Because remember, whenever anything ever looks certain, it usually isn't. So I would be careful. It would be my best advice. And they can, what's that expression? The Lord giveth and taketh away. Happened pretty quick there.
WBC's up a little bit, mate.
Which one? Oh, WGC. Oh, nice exit we did on oil earlier. So oil's now down to 110 from 112. And this is just after hours. This gives you an idea. And this is nothing I used to trade.
All right, mate.
That's it. So we'll catch everyone tomorrow.